Okay, good morning, guys. My name is Gavin. Welcome to Alphachain's weekly market brief. It is Monday, the 11th of April, another week. And let's cover some of the key elements from last week's session, but also cover what is to be expected for the week ahead. If you have questions as you're joining this live session, please put it in the chat room. I'll be happy to answer any questions that you may have. If you're watching the recording, make sure you put in your comments and then we'll respond to you in due course. So the prior week, looking at the prior week was more characterized by yields marching higher. And if we just look at, say, for example, focusing on the dollar index and the US 10-year. Yeah, so we look at the US 10-year yield and we look at the dollar index. So we can see that clearly that markets have been broadly ignoring these rising yields so far, but they should now start paying attention to these yields. Okay, stronger yields will have an impact on the markets. Okay, stronger yields are going to have an impact on the markets. We've seen the US dollar. Have a look at the US dollar. It's powering forward as one of the sort of major currencies, which is going on to test sort of a key level, the 100 mark. Okay, so if I just zoom in, sort of a bit of rejection at the 100 mark, but we've seen overall a lot of strength coming through. So the stunning rise in US consumer credit didn't really seem to scare traders, and the dollar index ended up 1.3% higher from last week's session. Switching over to other currencies, let's have a look at possibly the euro. Let's do a full screen there. We're happy to view it there. Okay, so looking at the euro is still trading very heavy, with markets selling it at almost every opportunity. This week is going to be an important week for the euro. We have the ECB rate decision, and it's a very crucial point because the markets are not expecting Lagarde to turn hawkish at all, but could she spring a surprise is the key effect there. Money markets are pricing in a potential 3 rate hikes by the ECB by the end of this year. And the question is Lagarde going to turn hawkish? And that's what the market participants are looking for, okay? But overall, so far, it's been quite bearish. You can see a clean down trend line, so much so we've had a lot of selling pressure in the most recent. Let's go from the 7th of high. Okay, so 7th of Feb high. From the 7th of Feb high, testing sort of this down trend line, where almost collapsed down to from a, let's have a look. The handle was 114.79. So from 114.79 with a selling pressure all the way through to 108.06. Okay, so testing the 108 handle. It's since then sort of pared some of those losses, and now we've gone on to test the prior low again. So we've got a very strong level of support. This trend line been in place since 2017. It's testing this key trend line at this moment. But yes, I think the only thing that's going to move the euro at this moment is going to be the ECB meeting this week. Let's switch over to another currency. Let's have a look at sterling. Now, the pound is trying to find its footing after a couple of weekly performances. Could this week's earnings growth and inflation data help it recover is going to be the key question. So we've got a lot of earning reports. Of course, we're now starting earnings season. Secondly, of course, as I just mentioned, we have inflation data to be released this week in the UK. But so much so, if I now just bring up let's bring up economic calendar. What I want to show you, let's bring up this week. What we have had in the UK so far is GDP month of month. This was released today. Okay, so we've had, I'll just scroll or bring it in slightly that way. Okay, that's better. So you can see the pound Pound's at a key level of support, testing the 130 handle. Okay, so this is a key level here. So it's testing the 130 handle. It's failed to sort of break through and close below the 130 handle. It's just holding some support in this region here. But so far this morning, we did have at 7 a.m. GDP month-on-month figure, which came in weaker than expected. Okay, so it came in at 0.1%, where the forecast was at 0.2%. The prior came in at 0.8% there. Okay, just looking at the graph, this is what it looks like. I do want to remove some of this. There you go, make it a little bit more. Remove some of it. Okay, so that's what it looks like. So initially we saw from COVID, the lockdowns, we saw some very negative sort of GDP, and also we had a large push in GDP levels. But since then, looking at sort of 2022, we can see some weakness coming in line with the GDP figure. And what does that mean? What does that mean? Okay, so far, you know, the UK economy growth is lagging behind expectations. And we're looking at February's data here. Yep. And this was reported by the Office for National Statistics. So there is an increasing possibility that the UK is heading into a recession. GDP only grew by 0.1% month over month. So that's slowing from 0.8% in January. Yeah. So do also note the UK economy is now 1.5% above its pre-coronavirus levels in February 2020. But overall, if you just look at the UK economy, is already showing signs of fragility. Okay, so in this sort of, this is a health check. GDP is showing us a health check in the UK economy, and which is far from surprising, given that in February that the world, you know, was brought on board with a lot of geopolitical risks, from the Russia sort of Ukraine situation taking place. But anyway, despite these worries and about consumer and company resilience that we've seen in the snapshots from sort of earnings season, it is unlikely that this is going to push the Bank of England to make any adjustments to their rate hikes so far. So we've seen them raise rates 3 times back to back. Okay, and I don't see that this is going to have an impact in their view to tame inflation. Okay, but the question is, are they going away from what market expectations are? Are they looking to become too hawkish and not go in line with normalization, where it could hinder the UK economy? And that's the sort of key point that we need to take away from this. Yeah. But what this is showing, though, this GDP figure is showing, that the UK economy is showing more signs of fatigue than the US. Okay, the UK economy is showing more fatigue than the US economy. So that is a concern for me. That is a concern. Okay, so yeah, that is where the pound is at this current moment. Just note what on incoming sort of information, as I've already mentioned, the next one is going to be inflation. Okay, so I know all eyes are on inflation, but you've got to remember GDP is a very important figure. There are 3 key important figures that you must always be aware of. First is, of course, GDP, then it will be inflation, and then if, of course, it's the demographics. Demographics meaning employment. How's the labor force looking? Okay. Yes. So moving on. Some of the other currencies that I could possibly also mention. So if we just switch over, if we sort of focus in these 2 areas here. So we're looking at dollar yen and we're looking at sterling yen. Okay. So there's a sort of 2 markets that we're going to focus on now. Now, if you look at where the yen is, yeah, the yen is certainly showing a lot more weakness. So we've seen a lot of strength in the dollar, we've seen a lot of strength in sterling. The dollar, of course, is the strongest currency. So if you look at the strongest versus the weakest, just looking at the bottom right corner of my screen there, guys, you can see currency strength there. The dollar's on top, the yen is at the bottom. So therefore, that's the strongest versus the weakest. And that's why we've seen the dollar a lot of directional move, and it's breaking the prior high, whereas sterling's unable to do so because we're seeing a lot of sterling weakness here, right? So yeah, dollar yen's back higher. is testing these critical levels near 125, as we've seen US Treasury yields continue to climb aggressively in the most recent sessions. And all, of course, both, if we look at Bank of Japan, Governor Kuroda, and all the sort of key officials with the BOJ, who head up the monetary policy, have reiterated today in a separate set of comments that the BOJ remains committed to its ultra-loose monetary policy and will ease even further if it sees fit. Hence why we see this rally taking place, right? So it just seems that, even though we're going with BOJ continuing with their ultra-loose monetary policy, they had their yield curve tightening policies in place. We're only going to see a one-directional move taking place in the yen. And for them, the yen weakness, it doesn't matter too much. It doesn't seem like it's mattering too much. But previously, we have seen that the BOJ step in if the yen falls out of place, right? But at this moment, it doesn't seem like they care too much. Yeah. So then their next focus is going to be their unscheduled bond purchases that the BOJ is going to take place as its 0.25% cap on a 10-year government bond yield is going to be on the firing line next. Okay, yeah. So we're expecting continuation in weakness in the yen. The VIX. Let's have a quick look at the VIX. Let's look at the VIX. VIX is the fair gauge that we tend to look at. VIX is the fair gauge we look at, right? We have one of the fair gauges I'm looking at is for the S&P 500. The other is for the NASDAQ, okay, the one in the orange. Both are sort of retreating from those all-time, not all-time highs, but those highs that we've seen recently around the 36 handle. So we're testing around the 2022 sort of mark at this current moment. It doesn't seem like there's a very risk-off appetite at this current moment. But things can change in a very short term, as we've seen in the most recent weeks. Okay. Now let's switch over. Let's switch over to some of the equity markets. But let's start off with actually commodities. Right, commodities are the talk of the town. The talk of the town, as we've seen these exponential moves taking place in these assets. So let's start with gold. Okay, so just focusing sort of on most recent. So we've seen a bit more bullish sentiment coming through. Okay, so this support level we can see has been tested multiple times with price action. Yeah, look at the daily time frame. Look at these daily candles holding support of this key region around the 1920 handle. Okay, so gold is going to get interesting this week. We've seen a rally all the way through to almost test out the 1960 handle. Almost testing the 1960 handle. We broke through the 1950 handle. Now, is this possibly a hedge ahead of the French election? That's sort of something to consider here. Over the weekend, we had the French election. We do have, we've got someone who's been manning the presidential sort of seat for some time, Macron, and then we have the second in the run-up, over the weekend, Le Pen, who's sort of a right-wing individual, right? Just looking at the stats from there, let me just have a quick look if I have something here that I can share with you. So looking through from this view of European and the French election at this current moment. So these were the results by those candidates in the first round of voting, right? So this is the first round of voting. The next set of voting, I believe, is going to be from the 24th of April. And from now till then, what they have is time to go into different regions and sort of garner more garner more voters. Okay, and that's what's going to be taking place in it. And I believe Macron's going to be targeting Le Pen's regions. But as you can see, Emmanuel Macron is ahead by 27.6%, whereas Marine Le Pen is only behind by 23.5%. Okay, so there's not much of a difference between the two. It's a very, very close call leading into the first round voting. Now, if Macron stays in place, he's an ex-investment banker, he is pro-capital markets, we expect markets to not react as much, okay? It'll be a good sign. But if Marine Le Pen is overtakes Macron, then we could see a lot of uncertainty in the markets. And that's why we may be seeing gold pushing a little bit higher. So just be mindful of this ongoing scenario at this moment, okay? It's a tricky one. It is definitely a tricky one. Is the question is Le Pen at this moment, going to topple the incumbent? I don't know. I don't believe so. I don't believe so because I do remember Macron stepping in last minute for being re-elected, looking to be re-elected. So yeah, there's a lot of concern now. Talking about French lifestyle, and we know that baguettes are very obviously common with the French way of life. The cost of a baguette has risen by 15% in the last few months. Okay, so of course, on voters in France, their cost of living is going to be the biggest concern for them, right? So the cost of living and energy is their biggest concern, okay? And that's what sort of, is going to help them garner those votes. But let's see what takes place. Let's switch back to, right. So yeah, looking at gold, now the question is, did the French election really have an impact on this? Well, it seems to, go on to prove that at this current moment as we're going on to test the prior highs. The question is, will we have any follow through? Will we have that continuation of a hedge taking place? I don't think so. I think we might see markets range bound for some period here, coming up to sort of resistance around the 1970 handle potentially. Okay, so yeah, just be mindful of what's taking place with the French election and gold. Switching back to WTI oil. Okay, so looking at crude oil, prices are under pressure, for the front contracts in particular for crude oil on the demand side due to the fear of an extension and even widening of COVID lockdowns in China. That's sort of a key important point to mention there. And on the supply side, by the massive coordinated release of strategic reserves in the coming months is also putting pressure in the oil price. Okay, we've seen the US recently release a certain amount of barrels of oil. So right now, we could clearly see that the price of oil is below that psychological support of the $100 a barrel of oil. So the question is, are we going to sort of test on some key supports around here? Okay, so we have a prior low reaching sort of, I believe the low was around the 94 handle. Let's have a look if I just hover just below there. Yeah, around sort of the 94 handle. Okay, so testing the lowest level that we've seen, which was the 15th of March, was 94 handle. Will price sort of go to test this sort of key level and then push it a bit higher? That's sort of the key question here. But of course, like I mentioned, those are sort of two biggest concerns for the market at this moment. One being an extension or a widening of COVID measures in China. The second, of course, is this coordinated strategic reserves being released in the market to put some pressure on the price of oil. Okay, switching over. Let's just refresh that. Looking at some of the equity markets. And I remember, if I go back just not so long ago, I mean, talking about the weekly review from last week, I spoke about sort of some of the key support resistance levels that I had in place. Have a look at that resistance level, right? So looking at from the prior weeks, sort of, we've gone on to test this level and we've rejected that level and we're pushing lower. We can see the markets sliding lower. European markets are not as bad, especially sort of the FTSE 100. But I think the correlation between sterling and, of course, the FTSE 100 is taking to play here as well. But if we're just focusing on equity markets, US equities closed on a weak note on Friday, but it did make a significant comeback, and that was because of the French elections having a bit more of an impact there. But yeah, for particularly, we've seen a bit more of a slide taking place with the Nasdaq than we are seeing with the S&P 500. The more volatile NASDAQ 100, which incorporates one of these, well, entirely technology-focused companies, which don't have a lot of cash reserves or and are sort of highly leveraged as well. And that's why you can see sort of a sector rotation occurring, going into a little bit more value stocks rather than growth stocks is what we've seen in the prior week session. But just looking ahead, I mean, what's going to be the key point for the equity markets for the week ahead is, of course, going to be the Q1 earnings season, which is kicking off. And it starts, of course, with financial companies this week. Okay, so a lot of the focus is going to be on some of the financial firms with their earning reports this week, and that's going to have the knock-on impact in equity markets. Yeah. Okay, so switching over, let's switch over. Let's have a quick look at, let me just share my screen. Okay, switching over to some of the crypto assets over here. So looking at the crypto markets here. Now, see, we've seen both Bitcoin and Ethereum sort of breach through the price resistance levels, and now it's fell back into the range. Okay, it's fell back into the range. That's fine. That's fine. It's okay. So you got to trade in line with market conditions. Okay, please note, trade in line with market conditions. If you find yourself you are biased to a direction, that isn't great. Okay, you should be trading an asset that you have a biased view. There's been a few individuals that I've spoken to in the most recent weeks, you know, who have a biased view in a particular market that they are trading. They believe in that view so much so that they will continue to trade in line with that view, even if the market is telling them, no, that's not the case, right? If the technicals go against their view. So try and trade in line with the technicals. At this moment, Ethereum, you can see, you know, markets are within this range, okay? Prices went on to test a prior low. If we look at sort of a prior low sort of being this region here, okay? So we've seen that being sort of the prior low in this region over here. Price is now testing this key level of support. This is a fantastic place to be now, right? So what we're looking for is if price tests this support level, I'm going to see some rejection in this region and the next drive higher back up to key level resistance. The next level of resistance, of course, is going to be where we've seen around sort of the 3,300 region. Okay, so price testing the 3,300 region most recently twice, once here, second over here, right? So we'll just delete this. So yes, this is quite an important one when it comes to looking at sort of key levels of support and resistance. Okay, so there's one there. I'll also apply a resistance in this region here. Okay, so these are sort of two key levels of support and resistance you need to apply to your charts. At this current moment, we're looking for price and see what it does in this region here. We're on the 4-hour time frame. You might want to drop that to lower time frame. See if we're going to breach through this. You know, overall, we've seen that there is a lot more selling pressure. Okay, so we've seen a strong selling pressure in this region here. Consolidation, almost a rectangle pattern being formed in this region over here, and we're looking for the next move lower potentially. Okay, so your bias should be more to the downside than to the upside. Okay, either we're looking to come back within the range back to test of resistance, break through this support level, but I'm not looking for any longs beyond this resistance region. Okay, same with the BTC USD. Okay, looking at BTC USD, a lot more selling pressure than Ethereum at this current moment. Okay, so we're seeing price continuing to make a lower low, lower high, lower low, lower high, another new low potentially in this region here, but we've not got any candle closes in this region, right? So you can see sort of, you know, if you look at the support level, there was a breach through with this sort of strong rejection candle here. Then it's consolidation. We're looking for potentially the next move lower, or potentially a retest back up to the prior resistance around the 43,300 mark. Yeah, I mean, over the weekend, not much news in regards to sort of crypto assets. We did have the Bitcoin conference of 2022 taking place in Miami. You know, that came to pretty much an end, I believe. Yeah, I mean, you know, there was a lot of hope and sort of regarding a number of nations looking to adopt Bitcoin as legal tender. Didn't really fall through. You know, we know of El Salvador. There was a couple of sort of islands mentioned at the time. But again, you know, and there's Mexico as well, but that's not in place anytime soon anyway. So yes, I mean, there were a lot of positive news in regards to the crypto space coming through from a large number of commentators at the conference. But you got to remember, most of those commentators are biased to crypto assets, right? So it's a one-directional view, so one sort of one-dimensional view there. But anyway, markets are again sort of moving in a flux to the downside. As we've seen equities move to the downside, we're now seeing Bitcoin follow. So what does that lead me to say? Once again, this is not an inflation hedge. This is also not seen as a risk-off asset class at this current moment. It's not a safety asset that you can go into. It's a risk asset, a risk-on asset, meaning that where investors are optimistic about the current market conditions, they want to take more risk on within their portfolio, they will allocate some of that risk to crypto assets. Okay, so as equity markets are sliding downwards, we're also going to see that being impacted with crypto assets. So yes, there is a very strong positive correlation between both the NASDAQ and the crypto space. That's it for me, guys. That's it for me. That's a wrap of the markets. And yeah, just be mindful of the earnings season, most importantly. Okay, so we've seen rising yields are playing a big role in the markets at this moment. So you must understand what that means with as we've seen sort of rising yields. A couple of weeks ago, in the last couple of weeks, we've seen, for example, the inversion of the 2s and 10s and the 5s and 30s. Okay, so we see some inversion taking place, but remember, yield inversion for a few days doesn't mean much. It's not a strong indication of a recession. Okay, what is a strong indication is if that inverts for some time period, usually 60 days as a minimum. So I'm not too concerned about that. We're just seeing rising yields is now playing a much bigger role in the markets. And then again, also that's we're going to see a bit more equity sell-off. We're also going to see at the same time bonds are going to sell off on that. Bonds are going to sell off on that, and yields are rising. Yeah, and of course for the week ahead, interest rate decisions. As I've mentioned, we've got sort of 2 key interest rate decisions to be mindful of. Well, 3 actually, 3. So we have the RBNZ and the Bank of Canada releasing their interest rate decision. They are both expected to hike rates by 50 basis points. That is what the market is expecting, to hike rates by 50 basis points. We also have the ECB rate decision, right? But again, no rate hikes expected. The focus is going to be on the tone of Christine Lagarde. Okay, that's what we're looking for. Is there going to be a potential surprise in their shift from a dovish to a hawkish tone? That's what we're looking for. So Euro shorts need to be very cautious. If there is that hawkish tone that comes through, we could see a bit more bullish sentiment coming through in the euro. Yeah, and then other than that, it's data-wise, you can look at some of the inflation reports being released this week, and of course, then from a microeconomic standpoint, we have earnings season beginning and with financial, and that is banks. We're going to hear from institutional banks in the upcoming few days. Okay, thank you for joining in this session, guys, and I will speak to you soon.